Good morning, everyone. It's Ben Buckner with Dan Bosse with Ag Resource Company in Chicago. It's Tuesday, July 22nd, and so far it has not been turnaround Tuesday. We've got markets extracting additional weather premium, and the story is the same. It's kind of a lack of trade deal details, favorable weather, highly rated crops. And I think, too, we're looking outside the U.S., and what jumped out to me in my inbox this morning was, pattern shift in the Black Sea, rainfall in Europe. It does look cooler and wetter in places like Ukraine. Still raining in Mexico. Canada looks pretty normal. So is this the year simultaneously we have a lot of major exporters producing trend above trend yields? That's still the theme. That's been the case for a while. You see anything else, Dan? And if you do, please share.
No, Ben, I believe you're right. It's a supply-driven bear market. We saw a little bounce last week in the first real weather threat to the U.S. crop in terms of some heat, but that heat now looks like it's fading. So let's get jumping right into the news here this morning. We do have Secretary Bessent, U.S. Secretary of the Treasury, going to Stockholm early next week for meetings with the Chinese. These meetings are likely due to an extension of tariff deadlines. So the Chinese are bumping up against the tariff deadline in the middle of August 12th to be exact. That tariff deadline is rumored to be moved about 90 days. We wrote about this in Ag Resource late last week, that the Chinese were likely to see an extended tariff deadline to negotiate. We think China's last in line. So as we do deals with other countries around the world, China will be last in terms of where that all happens. It all gets down to transshipments and other things, but the United States is trying to put China kind of in a box in its manufacturing capacity. And with that, they want them to be last as they do deals with Vietnam and Cambodia and Thailand and a host of other countries, with transshipment tariffs being far higher in those countries. So again, I'm not looking for much. We really don't think there'll be an agreement on U.S. goods, and that includes agriculture, until after U.S. President Trump meets with President Xi in the APEC meeting, which is held on October 31st to November 1st. So that's a long ways down the track, but that's when we think we need to get serious about, will the United States get a trade deal with the Chinese? So somewhere in our future, maybe towards the middle or end of the harvest period. As Ben, you mentioned, U.S. corn ratings are special. The U.S. corn ratings of this year's crop, 74% good to excellent, is the highest since 2016 or 9 years. So a very special crop. A lot of debate in terms of what that means in yield. We had our Ag Resource at 184, but we could envision a range between 183 and 191. So we'll watch this yield range going forward. It is very wide right now. Of course, we got a USDA crop report coming up in about 3 weeks, and we do have the Ag Resource crop tour following that. So that'll be key, trying to dial in what's happening here. U.S. soybean ratings did fall 2%, largely because of Kansas and North Dakota. Good, excellent ratings in both states were down 5%. So as you look at this decline, what's interesting is overnight, Kansas and North Dakota picked up a bunch of rain. Some of those totals in Kansas, 1 to 3 inches. So very helpful to the summer row crops of Kansas ahead of this heat. In case of North Dakota, they're not going to be as warm, but needed rainfall. And so I'm expecting that soybean good to excellent ratings will be higher next week. And it's one of the reasons the market's kind of sloughing it off, at least here today. I've got a picture for you of that hybrid, and I'm not going to mention a name because on here we don't. We love ag technology, and every company we believe does a very good job in that. But we have this discussion ongoing about long silks. So these long silks are related to the tassel coming out a little later than normal. So the silks grow long. This hybrid here shows you the length of that ear. So although there's some pollination spotty problems, this is a field in central Illinois, and we believe it's representative of what's happening with this hybrid. So again, problems, if you will, in some minor areas, but in a whole, we think this is this hybrid's not going to cause a lot of problems. The map to the right is, of course, temperatures as you look across the next 10 days. These are the highest temperatures we'll be scoring in the Midwest. You see some upper 80s across Minnesota, the Dakotas, northern Iowa, but the rest of the United States, or at least these corn areas, we'll see temperatures in the low to mid 90s. So again, warmer than normal by about 2 to 5 degrees, but nothing really overbearing for the warmest part of the year, that being, of course, the last 2 weeks of July. So I know the market made a lot about this last week. The market was overly short. We're not seeing that same kind of tone here this morning. As you think about some other factors that are affecting the markets going forward, you do know that weather is the predominant key here. So as we at Ag Resource have been talking yesterday and today, the European model, the one that we favor, is giving you an 11 to 15-day time frame, some below normal temperatures. Well, that corn plant that I showed you just before, it will be in the filling stage. This is when we need, of course, sugars going to the ear for starch formation. And so it's that length of when we go from pollination to dough to maturity, which is so key in yield determination. So this cooler forecast is very favorable for the fill stage of corn. We'll see how long it lasts, but you also see the abundance of rain across the northern plains and then through the central Midwest. It's not going to stop raining. Ridge riding thunderstorms will be frequent almost every day. And so the corn crop, although seeing warmer temperatures, we'll see a lot of advantages because of the soil moisture profile that it has, being mostly adequate to surplus as we look to coming weeks. As you look at China, we need to have China as a significant buyer. And at the moment, this is export data for the month of June. And you can see here, grain exports are down 47%. Soybean exports at 12.2 are up 8%. So again, a very sizable program from Brazil to China. I'm told in the last 5 to 7 days that China's bought about 40 or 50 cargoes of Brazilian soybeans. Let's talk about 2.5, maybe 3 million metric tons in total when you take Argentina or include Argentina in that whole mix. This is happening during the late September, October timeframe. This is when U.S. values are cheaper than Latin America. So purposefully, China's buying additional soybeans from Latin America because of the concern over trade. This is important to understand. Ag Resources at 1.5 billion bushels on U.S. soybean exports, well under the USDA. For that reason, we believe the Chinese are looking away from the United States and buying soybeans accordingly. It also tells you the importance of the U.S.-EU trade negotiation. If we don't have China as a soybean buyer, we need the EU. So it's something to watch very carefully as we go in the days ahead. This is a graphic giving you where soybean prices have been for the past year. You can see we've really been trading in a broad range between, let's call it 1080 on the top side, 930, 925 on the downside. And this range has held very, very well. Our opinion in Ag Resources, we're now heading back to the downside, likely in late August or September to test that 930 area relative to spot futures. Similarly in corn, if you look here, we believe we're heading back down to that 360, give or take a dime low that we set last year in corn. The trend is down. It's been down looking backwards since April. You can see that the supply bear market is well and alive, and how big is big will be the discussion as we head into the end of summer and early autumn. Then we'll get into combine detection. So my mind is this low that normally occurs in late summer may be delayed depending upon the final size crop number. So that's all that I have for you today, Ben. That kind of puts us back to where we need to be. But again, supply bear markets are still in existence. Maybe the one market that's avoiding some of this is wheat because of rising Black Sea prices. But again, a supply squeeze in Europe or the Black Sea is not something that'll sustain wheat longer term. The wheat corn spread at $1.60 is probably wide enough as I see it today. Back to you.
Yeah, and I think that's really, really good. And we're going to stay hyper-focused on, of course, U.S. weather, Northern Hemisphere weather, supplies. We're kind of starting to peak into demand. Like you mentioned, China. We did the story yesterday, so the dollar gets you in for 30 days. Check it out. We're kind of getting into the details of Chinese grain imports, and they just have not bought any corn this year. And I don't know what's going to catalyze new purchases. Sorghum imports in China are going to be, less than half of what they were a year ago. They're not buying as much barley as we thought. So something is afoot in China. And so, even a trade deal, what does that mean for agriculture specifically? So we're kind of, it's a market, so it's not just one-sided, but supply and demand. So we're kind of going to start to do some research on what the rate of clearing excess inventories is and what that looks like. Also, we're going to have in the next week or two, our actual yield forecast, why we think that, and breaking it down by state. So be sure to check that out. But I think to your point, Dan, kind of status quo. The trend is the trend, and that probably continues until mid-August at soonest, but maybe into the early part of harvest. As always, all the best in the markets today, and we will return tomorrow with a full breakdown of what's going on.